Gold traded with a bearish bias and achieved 1908 levels in the Asia and Europe session update today morning. I had mentioned a sell entry at 1918 and expect 1914 and 1908 as the next targets. Precisely achieving the levels, we have seen a slight reversal. At the same time, oil is traded with a slight bullish bias. Yes, 85.8 yet respected, and it has seen a reversal, now trading at 86.5. Now, what to expect from gold and crude oil? Which position you should take in order to profit? We will see with the help of charts and indicators. Do like, share, subscribe, and comment. Do press the bell icon so that you can remain updated with the twice a day analysis on gold and oil. This is the second update for the day. Also, you can join my free Telegram channel to get the live updates. All the links are mentioned in the channel and video description. Let's start. First, we look into gold, followed with oil. Watch till the if you look at gold's hourly chart, see there was a divergence from the 20 period. It has converged. It has in fact breached the 20 period moving average and has retraced a little on the upside again. Now it is very clear. Only a buying entry is recommended if you see it is staying above 1922 levels and then 1926.5. These are the two levels which gold need to break past by in order to confirm the reversal. As long as 1922 is not breached, do not think of a reversal and do not buy gold here. At the same time, on the downside, there are very good support here at 1910, 1908. Now look at the stochastic. This is rising from the oversold levels, while MACD is staying bearish. It is divergent. It is looking downwards. But if you look at the candles have started to converge because there was a lot much of divergence. Still, it has not yet crossed over, and hence there is still further bearishness left. RSI coming out of the overbought zone, coming to 2 hour. Likewise, on the 2 hour charts, similar observation here. Lower highs, lower lows. It has to break past by 1922 now in order to confirm the rise, and then 1926.5. If these two levels are breached, then you can expect that gold would like to bridge the gap on the upside towards 19. Else, it has still little bearishness, and on the 2 hour chart, the 20 period moving average is little far below at around 1907 levels, which it may try to achieve. Stochastic rising from the oversold levels. MACD is divergent. MACD is bearish. It is looking downwards. It can continue to trade further with slight bearish bias here. RSI is also coming out of the overbought zone. Coming to 3. Now see on the 3 hour charts, what has happened? Higher lows, lower highs. This is just consolidating here. Hence a breakout is what you should look for. Below 1910, yes, more bearishness. And then one can look forward to 1904 and 1900 levels. Yes, 1900 is going to be a psychological level, while the major support levels are seen at around 1890 levels. Also, if you look at, see the formation of gold here. If you look at, see this was the channel in which it was trading. I possibly expect it to fall back within the channel for a while now. This means it can try to come back within 1900, 1880 zone sometime soon. The stochastic has dropped. MACD was trading with extreme divergence. This we had seen earlier in the day. It is trying to converge now. A crossover shall bring little bearishness. RSI coming out of the overbought levels here. Coming to 4. Similar observation on the 4 hour charts. Lower highs, lower lows. It is trading in this bearish zone. It has to break past by 1922, rather I will say. Beyond that, little bullishness may be seen. Else, we are not going to buy gold as long as it stays below 1922. Now see the prices are too much divergent from the 20 period. It is waiting for 20 period moving average to come up somewhere here in this zone between 1900 and 1910. Look at the 50 and 100 period. This is also crossing over. These are all bullish signs for gold here for the near term. Stochastic has dropped. MACD was trading with extreme divergence. It has converged a bit. It has not yet crossed over. RSI coming out of the overbought zone here. Now trading very near to the top here. Coming to the daily chart. Looking at daily charts, there is a slight gap which is gold has given today, and with that lower highs, lower lows, trying to stay bearish here. And if it continues on the downside from here, there is further bearishness which can be expected here, which can in fact take the prices towards 1900. 1900 definitely going to play a major role in the direction of gold, because see if it breaks below 1900, certainly the bearishness is going to prevail, and I will look forward to for gold to break past by this zone here. This is definitely going to remain a critical zone and in between 1900 and 1880 levels. Yes, these are achievable levels, and below that it may try to bridge the gap here. Stochastic overbought, hence this candle can remain in red. While look at the MACD, this is a trading with extreme divergence. The candle size have peaked here, possibly we may see convergence for a little while, means couple of or more red candles here. RSI almost retracing from the upside here. Looking, see, ideally we should wait for 1910 levels to be breached, then only we can confirm a selling position. Else we can see a possible consolidation. Those who want to risk a little can sell at 1914 also, but still I will say 1910, 1908 is going to remain a very strong support zone. And this time, in fact, if it stays below 1910, then the bearishness may increase there below 1910 levels, and it can try to breach past 1908, which is a good support. Then the next target is going to be towards 1900. If not today, possibly by tomorrow, these levels will get achieved. On the upside, a buying entry is only recommended above 1922.22 levels. First target should be at around 26.5, and then the next is 30.32. Beyond 30.32 is where the bulls will take over. Take your positions accordingly, trade with a stop loss and a trailing stop loss. Now let's have a look at crude oil. And before we proceed, if you want to learn this art of, you can join my mentorship batch. 26 batch is starting today. Register yourself now itself. Reach out to me for more details. My telegram and email IDs are mentioned in the channel and video description. Look at the hourly charts for crude oil here. We have discussed 86, 85.8 is a very good support, precisely from the same levels we have seen prices reversing. Now on the upside, you can find out very good resistance is seen here on the upside. 86.6 levels. Yes, it has to break beyond 86.6 and then 86.8 levels in order to confirm the rise towards 87.2, 88, and then beyond that 89.2 levels will be seen. What it is trying to do, see, there was too much of divergence. Moving averages have come up. It has achieved the moving average and now trying to fly again. So yes, there is still bullishness left in oil. Stochastic rising. MACD on the other hand is divergent, is bearish. It is looking downwards. And if you look at the MACD, see, first wave, second wave has initiated. It has a potential to hit the bottom here. RSI coming out of the overbought levels, coming to likewise on the 2-hour chart. See, on the top side, the resistance is very strong, and the support on the downside is also equally strong here. So yes, below 85.8 we can sell 85.5, 85.3 and 85. Very good support is existing here at in between 85, 85.5. Below that, further bearishness may prevail. Right now, if you look at moving averages are looking upwards, prices are little divergent from the moving average, which suggests that there could be a slight drop and prices might try to achieve this levels at 20 period, which is sitting at around 85.5. Stochastic rising. MACD is in green, trying to converge crossover, and this crossover is coming at a slightly higher levels, and hence a little retracement on the downside can be expected. RSI very near to the top, coming to 3. Look at 3-hour charts. The moving averages have crossed over, trading with divergence bullishness. But yes, on the upside, the resistance is very very strong. I will wait for it to break below 86 again. Below that, you can again sell, but then be careful of 85.5, 85 levels. Very good support as long as 85 is there, and below 85 is only bears will be seen. Stochastic coming out of the overbought zone. MACD is in green, trying to converge. RSI is flat near to top. Now look at 4-hour chart. Same lower highs, lower lows, trying to yield a flag here. And as long as this zone here at 85.5 and 85 is not breached, we are not going to treat oil as bearish. There is a potential that it can try to achieve these levels, but still we are not going to treat this as bearish. And only if it breaks below here, that is 84 levels, we can say that the bears are taking the charge here and more drop can be expected. Stochastic looking down, MACD trying to converge here, it is in green, RSI staying flat. Coming to the day. Now look at the daily chart. See, the tail is formed here, and a breakout should bring bullishness. Just let it stay above 86.8 and 87.2 zone. Beyond that, certainly 87.6, 88 is what you can look forward to. You can note that 87.6 definitely a greater resistance, and then 88 levels here. This zone is going to play an important role in the deciding the prices for oil. At the same time, after this stronger bullish candle, it is just trying to retrace, and it can drop further towards 85 as well. The stochastic back to overbought levels. MACD, now see why it can be a greener candle. This is why MACD was trading with extreme divergence. It has converged a bit, and it can possibly cross over for a bullish move here. Yes, almost it has come to the lower levels and now trying to converge crossover for a buying entry. RSI is staying flat. So looking at this, I will recommend you to buy at 86.6. This time, if it breaks past 86.6, buying prices to be at this level 86.6. If you see this price at 86.6, you can buy, but then 86.8 and 87.2 zone, it needs to break past by. Then 87.6 and 88, only above 88 is where the bulls will take over complete charge. On the downside, I will recommend you to sell at 86, but then 85.8 it needs to break, and then 85.5 and 85. This is the maximum support zone for oil at 85 and 85.5. Stay cautious within the zone. Take your trades accordingly. Trade with a stop loss and a trailing stop loss. Like, share, subscribe, and comment. Press the bell icon. Join my free Telegram channel and join my mentorship batch. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you.